Ozempic didn't just change how people lost weight. It turned Eli Lilly into one of the most valuable companies on the planet, and the FSR tracked every stage of that transformation. This is LLY Eli Lilly, 1 year of daily data. Predictability score of 74.7%, average rolling FSR of 94.6%. This chart starts at 710. Eli Lilly is already enormous. Decades of blockbuster drugs, insulin, antidepressants, diabetes treatments, but the market is rotating. Investors are nervous about GLP-1 competition, manufacturing capacity questions, pricing pressure from Medicare negotiations. Price drops $700, $650, $620 at the lower round, interval 55. The FSR during that decline drops to 83%, the lowest reading on the chart. Even at 620, the data is saying this move has structural inconsistencies. The selling isn't organized. It's nervous, reactive, emotional. That's actually a signal. Then something clicks. Ozempic and Mounjaro trial data keeps coming in better than expected. The weight loss drug market isn't a fad. It's a generational pharmaceutical shift. Tirzepatide is outperforming everything. The manufacturing capacity fears start fading as Lilly announces $27 billion in new facility investment. Price turns $650, $700, $800, crosses the $893 yearly average around interval 100 and keeps climbing. The FSR recovers with it, back to 94, 96, 97. The uptrend has real structural support. This chart is a pharmaceutical company that accidentally became the most important stock in healthcare. Price hits 1,000 around interval 127. Eli Lilly briefly becomes one of the 10 most valuable companies in the entire stock market. A pharmaceutical company, not a tech giant, not an AI play, sitting alongside Apple and Microsoft by market cap. 94.6% average rolling FSR tells you this wasn't a meme pump. This was organized, consistent, institutional money moving into the GLP-1 thesis with conviction. Then the profit taking starts. 1,000, 1050, 950, 860. Briefly touching back near the yearly average. FSR dips to 89% during the pullback, but never breaks below it. That's the difference between a correction and a collapse. The structure holds. Institutions aren't leaving. They're trimming. Current price around 1050, back above the 893 yearly average. FSR on the right edge sitting at 95%, right back at the healthy zone. 74.69% overall predictability score reflects that volatile early drop and the mid-climb turbulence. Without those two events, this would be one of the cleanest charts on the channel. Eli Lilly isn't just a drug company anymore. It's the infrastructure play on the obesity epidemic. 40% of American adults are obese. GLP-1 drugs are the first pharmaceutical intervention that actually works at scale. Insurance coverage is expanding. Medicare is being forced to reckon with it. The FSR at 94.6% over an entire year says the market believes this story has decades of runway, not quarters, decades. 74% predictability, 94% rolling, prices back up above the yearly average. Watch that sliding window. If FSR holds 92% while price reclaims 1,100, the thesis is fully intact. If FSR drops below 87% and another leg down, something has changed in the institutional view of the GLP-1 market. Right now, the data says the Ozempic trade has structural foundation. All of this data is on predictability-api.com. Link is in the description. Are you holding LLY as a long-term GLP-1 play? Drop a comment. Subscribe for more. Thanks for stopping by. We'll catch you in the next one.